Welcome back to Bunnex Investment Group. In this video, we are going to talk about 4 small Forex trading accounts, which most of the traders have access to. A small account is any trading account that is $5,000 and below. Mostly, it is $100 to $500 in amount for that account. Is it possible to grow it to a substantial profit? The answer is yes, provided you can follow a system consistently. So in this video, we'll talk about a simple system you can use to grow that small account that you have. Sit back, relax, and have somewhere to take some notes. Firstly, we need to reset your mindset so that when you start to apply this principle of this system, you will be able to actually make a profit out of it. A lot of traders change strategies too much. They start the day as trend followers and then they switch quickly to a reversal trader and switch to ICT at each and every loss. To see results with this strategy, you need to be highly focused and take enough trades to see a profit. There is an old saying that states that take as many trades of the same style for you to get a profit. That's the summary of Forex trading. Therefore, be consistent in your entries and the system and see the magic manifest. So we are saying if you take enough trades with this particular trading system, you will be able to see a profit. So how much are we going to risk for the small account? Before we jump into the strategy itself, we must highlight the risk you must not exceed per entry. The maximum risk per trade, since it is a small account, is 5%. This means if you are on Euro USD and you get an entry with 50 pips stop loss and you have a $100 account, you are going to be using 0.01 as your lot size. That's a micro lot. You can calculate your lot size easily using the Forex calculator that you can get on the App Store. So we are saying if this is the case, it means your loss is going to be $5, your profit is going to be $10 on the $100 account. And that is the same exact thing that you need to do on each and every entry that you are going to make. So here are the strategy components. You need our common indicators, which are the 13 exponential moving average, 50, 200, and basically the M15 chart. Here's the strategy explanation. For us to buy, we need the following conditions to be met. 1350 EMA cross. We should see that first, and this is actually a signification that level 1 has been issued on the M15 time frame. Then 5200 EMA cross. This shows that the M15 level 2 has been issued. That's the second crossover. And entry is made at the first 50 EMA retest and a candlestick reversal pattern is issued. We are saying we need to see this crossover, and after that a first retest on the 50 EMA, and then we enter at a candlestick reversal pattern. Let's have some examples. Before we see real market examples, please check out our free Telegram channel where we share free signals, free advice as well as setups. Link is in the description box below. Alright, so this is USD against South African Rand, which I am going to use for our illustration. So we are just going to talk a little bit of what we just said in the slides. We said the first thing is to see a 1350, right? 13 is in red, 50 in blue, and 200 in white. We need to see a 1350 and then a 250 like that. We've said after we see these two crossovers, our entry will be at the first retest of the 50 EMA. So the first retest occurred at this particular point, and it was actually a candlestick reversal pattern that was issued. Therefore, our trade was going to be at this particular point, and our stop loss will be right above structure, and our take profit will be twice what we have risked. So if this is $5, we should get $10 on the profit side, and we can do so simply by using the Forex calculator on calculating the rightful lot size, so that if we lose a predefined risk, right? Let's go on, right? We need to see a 13, 250 and a bounce. This was actually a bounce that was issued, and our entry was going to be at this particular point. So our stop loss was going to be below structure, and we need to move our stop loss to entry if 1R has been moved, meaning that this trade was definitely going to end up as a break-even entry. Then here we have another crossover, 1850, then 5200. First retest to the 50 was issued at this particular point. We can see the market went our way. So basically, this is what we will be looking at. We need to see a crossover, these two crossovers, and the first retest to the 50, and then we make our entry. You need to backtest this strategy for you to actually understand how much it wins, how much it loses, so that you prepare your mindset whenever it starts to lose. Basically that. On that note, we've come to the end of our today's video. I'll see you in the next one. Have a blessed day.